Trying to get myself together here. Good morning, good morning, good morning. I just opened up IG and I saw the young lady from Modern Black Girl on a red carpet on something. I'm I'm gonna start selling something so I could be famous. I'm gonna start selling something so I could be famous. Remember when you was younger? Remember when you was younger and you wanted to be famous? Did y'all want to be famous when y'all was younger? Did y'all want to be famous when y'all was younger? When I was younger, everybody wanted to be famous when I was younger. They wanted to do something. Either they wanted to be like actors or singers or everybody wanted to be famous. I never wanted to be famous. I just wanted to have money. I wasn't a kid that wanted to be famous. I just wanted to have the money. I didn't want the fame. I just wanted to have the money. All right. Y'all excuse me. I was trying to get my IG together for no reason because don't nobody be on there. Uh, let's go ahead and get the pleasantries out of the way. Good morning. If this is your first time tuning in to Tim's Tidbit, which I really doubt that it is, allow me to say welcome. If it's not your first time tuning in, still wanted to say welcome, thank you, hanging out with me and Spidey, my sweetie, everything. If you like what you see, hit like. If you like what you see, subscribe. We're on our way to 2,500 subscribers. We almost there. I think we got like 2,300 right now. Thank you very much for subscribing. Thank you very much for sharing. Thank you very much for pulling up every single day because you are the reason why I do this. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day and talk about the price action. Why do I talk about the price action on Al Gore's internet every single day for the free 99? Because I want to help someone like you get your aha moment when it comes to trading and investing in all things stock market. That's why. That's why. Man. Um, y'all ain't want to be famous. Everybody wanted to be famous when I was growing up. They wanted to be a famous football player, basketball player, singer, dancer. Dancing was big when I was younger. They wanted to be famous dancers. They wanted to be actors. Anything with fame. Everybody wanted to be famous. I just wanted money. Even when I used to rap when I was younger, I never wanted to be famous. I just wanted the money. I started out rapping because my uncle taught me into being a rapper. I just wanted to be the guy behind the scenes, like making the music. And he was like, you be rapping, you be doing all these Jam Pony raps, you can write your own raps. And I must confess, my uncle he's well into his 60s now. And I think he's still trying to be a rapper. I think he is. If I'm not mistaken. I think he's still, I know he was trying to do some stuff. He was trying to put some music out. And one of the songs he was rapping, one of the songs he was trying to sing, and this was like maybe a year or two ago. It was straight patookie. It was straight up patookie. But he was doing club promotions at the strip clubs. Oh my God. It was bad. It was bad. It was bad. Hey, why am I talking about my uncle in strip clubs? Because I want to share with you all a philosophy of mine. And maybe you can incorporate it into your trading. Because I assume that most people that pull up every single day and hear me talk about a price action wants to be a trader, be it swing trader or day trader, right? This is more so along the lines of day trading, but it can also be applied to swing trading if you're getting close to wanting to take off positions, right? So my philosophy is no matter what kind of week I've had, right? no matter what kind of week I've had, Friday is my day. Monday is my day just to get a feel for the market, right? Just to get a feel for the market. Now, for Monday, it's supercalifragilisticexpialidocious delicious. Then I will engage, right? But Friday, no matter what kind of week I've had, especially if I've had a bad week, all I want to do is watch the price, right? If I've had a good week, like I had a good week this week, I refuse to take any trades on Friday because I will not. I've made it all the way to Friday. I've made it all the way to Friday. Profitable. Market, you will not take your revenge on me today. I know it seems like I'm putting more emphasis on the profitable week and not giving it back, but I really place more emphasis on if I've had a bad week, I'm only going to watch the price on Friday. If I just cannot help myself and I need to push a button because I want to reinforce something, I would do it in sim. I would do it in sim if I just need to push a button. But if I've had a good week, curse you, market, I will not give it back on Friday. Not a penny of it. Not a penny of it. I've made it all the way. Tuesday, Wednesday, Thursday, I've made it through. No matter if I had some losses along the way, but if I'm profitable, I can be up $2. I would not give you a cent back, you devious market. That's just something that I incorporated into my trading. And the reason why is because when I sat down and had a long conversation with myself, I said, self. Myself said, So you have given back a lot of profits on Fridays because you're trying to take these lottos. Shout out my family S2F. Lotto Friday. Boy, Lotto Friday then gave back a whole pieces of my pie. A whole lot of pieces of my pie. Lotto Friday then did it to me, boy. If anybody don't know what Lotto Friday is, Lotto Friday is where you take a small portion of, you take any portion you want of your proceeds that you have gained throughout the week, and you put it on a more risque trade. It's a more risque trade, and you take a little piece of what you just take the profits. You don't take no regular cash. You take a little piece of the profits, however much you want, and put it on a more risque trade to try to get a home run. Now, the whole concept behind the Lotto Friday or the Lotto is that the money you're putting in here, you're willing to lose every dime of it. So Lotto Friday then took out a whole bunch of my gains. But I incorporated. Curse you, market. I will not give back any of my gains on Friday. So that's what I started doing. Just want to share that with y'all before we get into the price. Big burritos. Shout out to all my, hey man. I'm gonna tell y'all like this right here. It's dog eat dog in every industry that's out there. What we need to do as people is learn how to separate business from personal, right? Learn how to separate business from personal. All of that gentleman's handshake stuff, Hey, learning by experience, right? That's not the way you really want to learn. Who is the guy? The Truth. He was a gospel. He's a gospel rapper. His name, The Truth. He made us. I can't remember the name of the song, but in the song he said, "They say experience is the best teacher. That's what they teach us in school. But I say experience is the teacher of fools, because a wise man would." He said, "Experience is the teachers of fools, because a wise man would learn." Pretty much, he said a wise man see what other people do and know what not to do. Right. And I can't remember the exact lyrics because it was a long time ago. But if you see somebody walking to a wall and it looked like it hurt, you should look at that and be like, I'm not gonna walk into that wall because that looked like it hurt. You shouldn't go over there and walk into that wall to get the experience of feeling that hurt to know not to do it again. Pretty much sums it all up. Now, why are you saying all this, Tim? I don't freaking know. I lost myself in what I was saying. I was going somewhere. Then I started trying to think about the lyrics, and then now I don't freaking lost it. But now it's gonna drive me crazy because I can't remember what I was saying. Oh yeah, separate the business and the personal, right? So when money get involved, it will divide a house. I don't care what the house is, right? When feelings get involved and money get involved, it makes it 10 times worse. And when people get their feelings hurt, division come about, and the overall goal that was set out upon in the beginning by everybody that was sojourning together, it gets lost in the foolishness because people don't know how to separate business from personal. All right. I'm not saying everybody got to be friends. I'm not saying everybody got to like each other. But when you learn how to separate business from personal, a lot of stuff won't hurt your feelings. Because guess what? At the end of the day, when people trying to feed their families and people trying to eat, it's self-preservation above all. Remember yesterday when I was talking about how when the smart money use people like me and you to offset their positions. You know, when I see TV teaching about the smart money goes long here and then they find somewhere to offset their long positions down, up here, wherever, you know what I'm saying? Go short here, go long near, whatever. Go long here, go short here. I'm doing it backwards. Anyway, they look for people like me and you to offset their positions. Right? Now, can't we all just get along? In the midst of losing myself, that's all I was saying. Can't we all just get along? As I look over here at my screen, I see I do not have Spilene up there, and my screen still looks like it looked this morning when I came in here to watch the market. I before I went to bed, I set a limit order on my sim account to I do stuff like testing stuff that I normally don't trade to kind of get my feel for it, to see if I like it, testing stuff, you know what I'm saying, doing stuff. So what I did last night before I went to bed, I set a limit order. I set a limit order at you can't see it, but that red line, that right there is actually a green rectangle with a red line around it, right? That is, get out of the way, dollar. That right there is an hourly volume imbalance. That's what that is. When I shrink it down, it looked like just a red line, but that's an hourly. That right there is actually an hourly volume imbalance. I set a. Let me find the time so I can tell you the correct. 15. No, it was after that. It was this. Yes, this right here. 1550. That's it there. All right. So what I did, I do stuff like this when let me go up and go out. It make it easier. That's why I can't really see it because I got it on a 5-minute chart. Okay, so boom. This makes sense to me now. If you see here, right, what I did last night when I was getting ready to what was I getting ready to do? I was getting ready to do something. It was shortly after I got off live with you all. I was getting ready to do something. But this low right here, this 6 o'clock low right there, that 6 o'clock low right there. What I did, I set a limit order for that 6 o'clock low right there to test out trade in a turtle soup, right? To test out trade in a turtle soup. And it was successful. It was a successful endeavor. But let me explain why. And well, first of all, for those who don't know what a turtle soup is when you get to a low, when you get to a swing low, and you're anticipating the market to turn at that point. For whatever reason, you deeming it to turn at that point, right? You're anticipating the market to turn at that point. So you're fading, if you will, the breakout, right? So in this case, let me break down. I know some of you may be looking like, Tim, that's just a random swing low in the middle of price action. What make you want to try to trade a turtle soup off that? I'm glad you asked that question, right? Looking at what price has done, right? Looking at what price has done, right? I deemed, right, this leaving here. I deemed this leaving here. I deemed all of this over there as being a balanced price range. And I did not anticipate the market going back down there until it hit the top of this fair value gap right here. This right here is a daily fair value gap. That's the daily fair value gap. Over there, I deleted it off. But if y'all remember when I last night, wrong thing. Last night, when I was talking about this right here, I was like, somebody remind me to talk about this. And then somebody said, nah, we good. That's the fair value gap that I was talking about right there. And that's the second trade that I put on this morning when I got up this morning to watch the London, right? When I got up this morning to watch the London over here, that's the second trade that I put on. This one I set last night with a limit order. This one I actually sat in here for. This one I actually sat in here for, right? And but this right here, I deemed it as a balanced price range, and I didn't anticipate the market trying to come back down to this imbalance or this imbalance For anybody who can't see it, there's an hourly fair value gap here, which we just hit. Look at that. We just hit that. And then there's an hourly fair value gap right here. Right? I said, hey, I don't anticipate the market coming back down here to attack these imbalances, right? Until we get at least to the top of this daily fair value gap, right? And hold up. Sent you something, Tim, and enjoy. What you sent it where? To my phone or to IG? Where did you send it, Mark? You sent it to my phone or you sent it to IG? Let me see. I gotta check that out. I'm on. Ain't nobody on IG right now, so I can close them down. Ain't nobody on IG right now anyway. Get out of here, IG. Let me see. You ain't send me nothing. I ain't got. Hold on. Let me see if you texted to me. Oh, you did. You texted to me. That's you.
Good morning, trader.
That was you. Was that you?
Today is a new day, a fresh start, and an opportunity for growth and success.
How long is this?
As traders, we face new challenges and opportunities every day.
No, sir. That's too long.
To us to seize them.
7 minutes.
The most of them.
Man.
Key to success.
The AI thing of you was fire on the thumbnail. Who did that? I'll hit you up later, man. Get off my live. Anyway, what was I saying? Oh yeah. I didn't expect it to come down here until we came back to the top of this fair value gap. And the reason being is this was the thing that I sent out when I told you I sent it out to the black spiders. I sent it out to the black spiders. I said, okay. Why did you pop up over there? Come here. Right here. A breaking market structure here. I would look to attack the daily bearish fair value gap. So a breaking market structure at 39.64, which was the buy side or the previous day's high, which would have been Wednesday's high. I said a breaking market structure here. I look for it to attack this daily fair value gap right there, right? So boom. Then shortly after that, we got the boom right there. Shortly after that, we hit it. I put like the eyeballs there, like, and I sent the thing. I said that was quick. So now that we've gotten there, this right here, that move there, right? It deemed all of this right here as the balanced price range. That's the same thing that's over here. This area here, that's the same area right there, right? So this is the candle right here that I'm talking about. That move there, this candle here, this 11 o'clock candle, that'll be 12 o'clock for Ninja Trader, right? This 11 o'clock candle right there, that right there deemed this right here as the balanced price range. We've gone through that a million times, but just in case somebody don't understand why I'm saying this move here deemed at the balanced price range, because if you look over here, we've offered buy side and sell side a multitude of times, right? A multitude of times, and we have a few balanced price ranges in here, right? When we come in here, right? Took off there, came up there, kind of consolidated a little bit. Then we blew past all of this right here, right? Letting you know all of this over here is balanced out. Then we pushed back up into the imbalance that we made on the way down, came down here, dilly-dally. Then we took off again, coming all the way up, taking out the buy side. Then we pushed down, came back up, consolidated here, took off again to the downside, right there, consolidated, pushed up again. Whenever we get them jolts away like that, the algo is done with that area until it go handle some other business, right? So we come down again and then we stop right there. Now we don't have any imbalances to think of in this area over here. From there to there, no imbalances to think of, right? On the hourly level at least. And then we take off, leaving that area. When we take off and leave that area, now you can just deem it as being balanced over there because the takeoff indicates it's a balanced price range, right? So boom, when we took off there, we hit the daily fair value gap, right? So once we got inside the daily fair value gap, I broke it down into quadrants, right? I broke it down into quadrants. After the, what in the world just happened? In the world just happened? The Fed watching. The Fed watching, right? After we closed here, this was, I'm assuming it's the, no, this is, oh, I took this during the day. This must have been during the day because that's 12 o'clock candle. Okay. Yeah, that had to be during the day. Yes. Because that, yes, right there. That was during the day when I took that picture. That was during the day, yes. This is when I sent it. I said, somebody remind me to tell, because this is that red candle right there that we were working on. This candle here, the 1 o'clock candle, that'll be the 2 o'clock candle on Ninja Trader. This is that candle right there that we were working on, right? And as you see, we had got above consequent encroachment of that daily fair value gap. We closed above the quarter, right? We closed above the quarter, and then we had poked above consequent encroachment. So therefore, right? Therefore, I said if we get, when, I ain't gonna say if, I said when we get to the top of this fair value gap and close it, right? I'm going to short it back down because we've gotten through consequent encroachment, right? We've gotten through consequent encroachment. We closed above the quarter, right? So we closed above the quarter. So I'm like, okay, we want to keep going up. We poked above consequent encroachment, right? And when we poked above consequent encroachment, that put us into, right, this hourly fair value gap up here, right? That put us into this out. So we poked into this hourly fair value gap over here, which is this green box right there, right? Right, put us in here. That's here, right there around this time, right? Pushed up in there, poked through, got into the hourly fair value gap right there, right? So we're in the hourly fair value gap. So now that brings us up to where we are now, right? That brings us up to where we are now. So when we was doing the live last night, right? I was looking at the price and I saw us, still fiddle-faddling around at the bottom of this fair value gap, right? Now, mind you, we've come above consequent encroachment. It was the socks. I had to change. Y'all don't mind me and my sweetie just sent me a text. We've been texting back and forth. Anyway, we were above consequent encroachment on, let me leave. Did I close that picture? All right, so 39.91.13 is consequent encroachment on, well, I can just do this right here. I'll just do this. Okay. Make it bigger so y'all can see. Now, let's go into the mind of Timmy Rogers for real now. So now, all of this down here, I deemed a balanced price range, right? I really wanted to share this with y'all last night, but I didn't get a chance to because I didn't want to offend anybody. But I really wanted to share this with y'all last night so it won't seem like I'm just doing this in hindsight. But I didn't want to offend anybody. I didn't want to offend anyone. Okay, so notice I'm using, this is the candle that left. So I'm coming from the candle right before back this way, right? From the candle right before back this way. And I've highlighted all of those, right? So, consequent encroachment of the daily fair value gap. We got above the 20, we got above the quarter. So I'm like, hey, price want to keep going up. Matter of fact, let me do this. Quads. I'll put it into quads. Extend right. Then I'll take away the actual, I'll hide the fair value gap so that we can, now the quads got it broke down for us. Okay, so now the fair value gap is broken down into quads now. My chart is starting to look like Angela's now. Okay, my chart is starting to look like Angela's. Let me move this one out the way because I don't need that at all. I don't need this either. Starting to look a little bit better. Okay, so this right here, the green rectangle is the hourly fair value gap that we poked into once we went above the I need this right here. Let me change this because I need the levels. Don't really need the prices. I just need the levels. Okay, so see, there you go. So we closed above. I'm sorry, y'all. I'll be freestyling this. I know it seems like I'm all over the place, but deal with it. Okay, so left the balanced price range, right? From this candle over. We came up, we closed above the lower quarter, the first quarter of the daily fair value gap. Okay, bing. They give me the idea that we want to keep going up because we pushed up and we closed above it, right? Got the balanced price range over here, right? So we got up, we poked above equilibrium. I mean, yeah, is consequent encroachment. Poked above consequent encroachment and wick back down. For those that's newer to the channel and don't remember, whenever I get a closure above a certain level, I take that as the algo saying, or below. If I get a closure above or below a certain level, I take that as the algo saying, I want to go that way right now. If it wick up and come back down, I take that as the algo saying, I want to go that way, but I got some business to handle the other way first, right? So that I've said that a million times, but I know people don't go back and look at old videos, right? So we get above that first quarter, close above it. Okay, the algo saying, I want to go that way now. We get above consequent encroachment and wick back down. Algo saying, okay, I got some business to take care of the other way, right? So we come back down, right? Get down here, take care of whatever business it had to take care of and wick back up, right? When it wick back up, we come up here and then we close above consequent encroachment. And then now we're just kind of consolidating, but we've got a closure above consequent encroachment. So this closure right there, now all the other stuff, right, that I was saying was just leading me to the point where I wanted to make a decision, right? All this other stuff over here was leading me to the point where I wanted to make a decision, right? So when did I make that decision? I made that decision what is my mouse doing? I made that decision once we came back up here. Once we came up and we took out, right? We came up and we took out the buy side above this wick that say I want to go that way, but not quite yet. Right. Once we came up and took out that buy side right there, and then came back down to this fair value gap right there and wicked off of it. That right there is when I said I'm going to try the turtle soup if we don't take out this low before before I get ready to turn it in for the night. Right? So that's why I picked this low as the spot to take the turtle soup, because I started all this saying, Tim, that just looked like some random swing low in the middle of price action. But balanced price range, right? Get above consequent encroachment, but not quite yet. Come down here, handle your business, push back up. Now, this is a balanced price range, so I'm not anticipating price coming back to this imbalance or that imbalance until it takes care of whatever business it's got to take care of, because it said I want to go that way, but not quite yet, right? And then when it came back down to the balanced price range, right? Came back down to the balanced price range, came down into that wick over there. It's in the balanced price range, and it wicked up like pang out, took off. See that? When it hit it, it's gone. It took off, right? And took out that high, right? Breaking market structure up, came back down to that fair value gap right there, and set that swing low right there. Wicked up off of that, set that swing low. Now we're in the area, we're in the time frame where we're in the Asian right now. Ain't a whole lot, the Asian don't trade like the London in the New York. So that's why I deemed this low right here. This low was the sell side. This high, the high at 4 o'clock, that'll be the 5 o'clock candle for Ninja Trader. And then the low of 6 o'clock, that'll be 7 o'clock candle for Ninja Trader. That was the buy side. That was the sell side, right? I'm anticipating price to continue going up based off this is a balanced price range. I want to go that way, not quite yet. Came back down to the price range, wicked up, took out the buy side, right? Now we're trading in here. We've taken out the buy side there. So now I'm anticipating we've taken buy side. We're going to come back, test this sell side. Got a volume imbalance under here. So we can test that sell side, maybe even hit that volume imbalance, then go. That's my thesis. All right. That's my thesis. That's the why behind it all. And hopefully I didn't confuse you as much as I confused myself. Now, the second sim trade that I took, I said I was going to short it from the top of this fair value gap. Right? But Tim, you normally take your trades at consequent encroachment. You're right. I do. What did I say? I said I use sim trading on Fridays to do stuff that I normally don't do, to get a feel for it. Were you not paying attention? Okay. So the reason why I was shorting it from the top of the fair value gap is this idea played out to perfection, right? It played out to perfection. Not trying to toot my own horn, but I was happy with the way it played out. So, but this idea right here, this from there to there, that was going, that was really pushing me outside of my norm. And the reason why I say that is because I was going long after this price leg right here had look where we are on this trade, on this if I go from here up to that high right there, I can move all this other stuff out the way now. Right? If I go from there to that high right there, right? Look what we are. We are way up in this is equilibrium right here. We are way up at the top of the premium. Tim still ain't changed. What you talking about, Lex? Still ain't changed them candle colors. What are you talking about? You know what's crazy? Lex just said Tim ain't changed them candle colors. I saw, remember when I was telling y'all about I always be getting these people on my timeline that I don't follow. And somebody said something about I'm bad, something getting bad when I done changed the candle color, the candle colors. Something is gonna make me. I don't know what it is. It was something part of my timeline about candle colors. Anyway, it's way up in the premium, right? So, and the reason why I say it really pushed me outside of my comfort zone, because I'm really leaning into trusting, you know what I'm saying? Like trusting what I'm seeing with the price. I'm really leaning to trusting what I'm seeing with the price with this sim trade right here that I took before. And again, and know your limitations, right? The reason why I set a limit order to let it do it while I wasn't in here, because this is totally against how I trade, because it's way up in the premium of this move right here, right? It's way up in the premium of this move, right? We've taken out buy side, right? We've taken out buy side, right? We've come up, we're in the premium, we've taken out buy side, and now we're just kind of consolidating up here, right? And we got a swing low right there that we can easily come back down to and break through, you know. But I'm trusting the process of, okay, this has been deemed a balanced price range, right? And I'm looking forward to attack the top of that fair value gap, because we've broken through consequent encroachment, right? And then we've come back up and gotten that closure above consequent encroachment. Oh yeah, I still use generic colors. I ain't got time for that, right? And we've gotten back up. So I'm using the sim trade to do stuff I normally don't do, right? And it played out to perfection, right? Now, going back over here. Now, this right here, I ain't got no problem with taking this in front of the computer. Why? Because if we go back to the daily candles, what we was talking about last night, right? We're on the daily candles, right? We've come down. We got the breaking market structure right here down to the bottom, right? Come down, stop short of taking out that sell side right there, push back up into the fair value gap right at the breaking market structure, right? Right at the bearish breaker over there that we was talking about, right? Price, and it stopped right there. Stop right there. Now, when price gets to that area, right? What I told you to do, look for the divergence. Once it gets to a destination, look for the divergence, right? The divergence was there, right? The divergence was there. We were coming up to the top of the daily fair value gap that I had already scoped out from the what's the name right there. We was at the top of the daily fair value gap that I scoped out right there. And then we had confluence with what? This hourly fair value gap right there at consequent encroachment, right? We're right there, that hourly fair value gap at consequent encroachment. And what were we doing? We were struggling we had divergence. Once we got right here, we started getting the divergence, and we were struggling to get to that consequent encroachment, right? That consequent encroachment was also right there at the top, right? Need to add Spider Gang colors to your charts. It was right there. The consequent encroachment of that hourly fair value gap was right at the high of the daily fair value gap, right? And price was struggling to get to the consequent encroachment, right? If this is how I look at it, if price attacks the consequent encroachment, right? Oh, I'm like, oh, we bullish, right? But when it struggled to get there, I'm like, oh, we semi bullish, or we running out of steam, right? And then I got the divergence playing in with it from the dollar and from the, I can't remember if it was the Dow or the Nasdaq, but one of them was stupid weak. One of them was like, I'm so weak. One of them was stupid weak, and we had divergence on the dollar. So that heightened my anticipating of shorting from the top of this daily fair value gap right here. Anticipating shorting from the top of that daily fair value gap right there, right? And so boom, there it is. So I had one where I used the sim trade to do something that I don't normally do, and it was based off of what I talked about. And then I did another sim trade this morning while I was up, when I usually trade in London. But since I've had a good week, curse you, market, I will not give back any of my profits. And I just needed to push the button. So I sim traded a short back down to the sell side. Right? Took it from the high of the daily fair value gap, right? Set my, what's the name? Normal. I set it up as my normal 1-to-1 shooting for 5 points, but once I put it on, I just pulled the target down to the low. I want to say I put it in between, what's this right here? Because I just drug it down. I didn't go to like a specific price. I just drug it down, and I want to say I put it was either in between this volume imbalance and that low right there. And I don't know the specific number, because it was like I just grabbed it and drug it down. I didn't, you know what I'm saying? I didn't go through my whole measuring it out and seeing what I want my target to be. I just grabbed it and drug it down because it was just a sim trade, and I was fun to go back to sleep. I was tired. So yeah, hopefully me breaking down my thought process helped somebody. I wanted to talk about a lot of this last night, but y'all can blame Robinson. Alexandria Cartwright. I don't know if you still, thank you. News at 10. TK. Alexandria Cartwright. I don't know if you're still in here, but if you are still in here, please, my beautiful eldest daughter of mine, please stop putting your real business on Al Gore's internet. These internet hobos, they are out here pocket watching. They're out here pocket watching. They already anticipate us being filthy rich people. And then when we get out here and we put actual numbers on it, I know you Tammy two pistols. I know you Tammy two pistols these days. But please be careful. Love you much. Hey, do internet hobos. Hey, do anybody got anything else Anything else? And then black spiders, guess what? Guess what? I have spent a lot of time just walking through, talking about the price action. And I encourage you all to not give back any of your profits. So we are not going to do a live market watch again today, because I know that some of you have had vainglorious weeks, and I'm not going to entice you to give back any of your profits by sitting in front of the computer and watching the charts. And for those of you black spiders that, aren't as far along in your tape reading, I truly jollipies. We're going to pick it back up on Monday. Do anybody got anything? Mess around and find out. You feel me? I ain't giving nothing back. You feel me? Hey, do anybody got anything? Do anybody want to ask a question? I ain't doing nothing. We've been on here for 52 minutes. I ain't doing nothing for the rest of the day. So if anybody want to ask a question, matter of fact, I even put the link in the chat. If anybody want to pull up and ask a question, if anybody want to just ask a question in the chat, I give it a couple minutes. While I'm waiting on that, let me go check and see if we got any members that got new badges, or if we got any new members. Oh, Black Chicago Be Like came out last night. Okay. I already know what I'm going. Oh, look at this one here. Here to learn and share. Here to learn and share. This is just for you. This just for you. Share screen. This just for you. Right there. I saw the Black Chicago Be Like over here. But look at that. Look at that cow foot. Look at that cow foot. Look at that. Wait. Well, that's gonna be a good one, though. I bet that's gonna be a good one. I bet that's gonna be a good one. Hey, I guess ain't nobody got nothing. Ain't nobody putting nothing in the chat. So I'm gonna check to see if we got any new members, and then I'm gonna go ahead and call it. I'm gonna check to see if we got any new members, and then I'm gonna go ahead and call. Do y'all want to watch the cow feet? Do y'all want to look at the cow feet? If y'all want to look at the cow feet, put a 1 in the chat. If y'all want to look at the cow feet, put a 1 in the chat if you want to look at the cow feet. Okay, we got Venus. We shouted out Venus. Venus upgraded. Yes, we shouted out Venus. Derek, Miss ANG. Let me see here. At Ellie, yeah, we shouted out Ellie and Rodwell. Okay. Nobody to shout out as far as with the members. We shouted out all the members. Do you? Oh yeah, I see some ones. Let's go to the cow feet. Let's go to the cow feet. Russell Wilson. Did y'all see White Russell Wilson? Hold up, I got to share so y'all can hear it.
Friday. Well, you've taken it too far. Look at.
Yes, sir.
Look at that for an open, seriously sore lesion. There's a hole going all the way through to her corium.
Imagine pulling back the skin on your foot and allowing whatever you stood on to come in contact with the flesh. Currently, that's this cow's predicament.
And I won't let it
Shark
when I see you dance. Comes
Move
when
out
I
the way,
fall
this more.
and time goes slow.
Okay.
I fall into you.
We put this on 5 minutes. We gonna put this on 5 minutes. We gonna chart the cow feet. Yes,
Usually, I tell you, I've seen this problem 100,000 times, and that I know exactly what is going on. This one is a little different. This
Oh,
one
man, y'all
is
can't see the
unusual.
chart when I-
It's
when I
very
put
rare for
it
us to
down.
see such a deep gouge right down the center of a cow's soul. This is clearly something that is really hurting this animal, and once we get to the bottom of it, hopefully we'll be able to do something about it.
I think He'll Learn to Share got I think He'll Learn to Share got an iPhone. So hey Siri, show
You can
cow
see the
feet.
cow flenching her
Hey
foot
Siri,
ever so often.
not you, not my
This
Siri.
cannot
Hey
be
Siri,
comfortable for
show
the
cow
cow.
feet.
She's obviously in pain, and the vibrations from my grinder must be aggravating the problem. So I tread as carefully as I possibly can. I don't want to upset this cow any more than is absolutely necessary. But believe me, folks, this is necessary, and she's going to feel a whole lot better for it.
Yeah, there we go. Right here. When he get down into the
Be
good.
careful.
Look at that. Look at the lesion.
Today
Look at the
we're
hole.
working
It's
on a
got a
farm
hole
with
right
around
there.
600 cows, and in the background you can hear some of them mooing and maying away. Yeah, I said maying. That's the calves in the background, and for some reason they sound a little like sheep.
Look at that. Look at the hole in there. Look at the hole in there. Yes, sir. Well, look here. Hey, hey.
Look at this, actually, folks. We've got a different glamorous assistant today. This is my other brother-in-law, Kev Boy. Not Craigie Boy, it's Kev Boy. Craig has COVID. Craig, get better soon. I'm not worried about your health, it's just I have to do everything. Host of a podcast that I featured on just the other night.
Oh, he put that what's name?
Why I said salicylic. Say it like that. Right, let's wrap this. Now the glue's set. Hello? If you've any idea
like
why I
when
say it like that. Right, let's wrap this. Now the glue's
Look at
set.
that. Golly. Did they put that salicylic acid in there?
Which it is.
Clarence also, I bet them cows be like, ooh, thank you. Ooh. Hey, man. Hey. Hey, man. Hey. I'm gonna go ahead. I'm gonna spare y'all. I ain't gonna do it no more. Hey, since ain't nobody got nothing, and we done looked at the cow feet, right? We done looked at the cow feet. I was trying to show both y'all, but when I be sharing it so y'all can hear the sound, you can only see the screen that I'm sharing. You can't see the whole screen. But we've come back down. We've come down to that that one hourly fair value gap that we came down and touched. Let me go back to trading view because I got it marked up. I had marked it up. Oh, I deleted it. Did I delete it? Oh, I deleted it. Oh, well, the hourly fair value gap, I'll just take this right here because I don't need that. The hourly fair, we had came back down to that hourly fair value gap right here. It was a bullish fair value gap that we came back down to. Boom. We hit the hourly fair value gap there and rejected off of it. We pushed back up into another hourly fair value gap right here. So, and this is why. This is why we have been in, let's look at the dollar. Let's look at the dollar. We have been in some peculiar trading times. Put our divergence over here. We have been in some peculiar trading times, and the markets have been, you had to be nimble. You've had to be nimble over the last few weeks, to say the least. But now, looking here where we are, we got some crazy divergence. These 15-minute candles over here. Excuse me. This is the 315 candle on let's go over here to the actual high, because we had some divergence right there too. Because if you notice there, right? If you notice there, we had divergence going on already between these right here. Remember this morning I was up and we was having divergence, right? We had the NQ was showing weakness. right? It was the NQ that was showing weak. I was like, one of them was showing weakness. It was the NQ. So the NQ was showing the weakness right there. And then now, since then until now, the NQ has been showing the strength, right? The NQ has been showing the strength, right? Looking at the highs, where I'm just looking at the highs on them, right? So looking at the highs on them. So we're still in divergence, right? All right, we're still in the divergence there. So why are you saying this, Tim? I'm saying this because I already said on Fridays after I had a good week, or on Fridays after I've had a bad week, I don't trade on Friday. If I have to push a button, I use sim trading, right? Now, what does it mean when we're in divergence like this right here? When we're in divergence, if we were actually in a trending mode like this right here, how we was trending down right there, how we trending down, when we start to get divergence in between the indexes, the likelihood of that direction continuing starts to lessen, right? It starts to lessen. The likelihood of that direction continuing starts to lessen, right? And so what is that going to create? That's going to create chop. That you're going to start to go up and down, right? You're going to start go up and down. It's not going to keep staying in a nice trend for you, right? It can make it be unpredictable. That's why I say you have to be nimble. You got to be nimble. You got to jump in and out. You can't, you know what I'm saying? You can't marry a trade. You can't marry a direction. You got to trade what you see, right? You got to let the market know that I got options, right? You got to let it know I got options. Now, why am I saying all that? Because, right, we were coming down and we hit this fair value gap right here at 8 o'clock, right? So that's right there on this 9 o'clock candle on Ninja Trader, 8 o'clock candle there, right? So we come down, boom, we hit the direction. I mean the destination. Boom, we hit a destination, right? We start going back up. Once we hit the destination, when we hit the destination, what are we looking for? We're looking for the divergence, right? So the all up in here, the NQ was showing more strength than these two over here. So the NQ showing strength, right? There's some divergence leading up to that destination, right? Leading up to that destination, there's your divergence leading up to that destination. NQ showing strength. Once we get down, boom, hit the destination, then we reverse. The one that was showing the strength in this case, like most of the time, the one that's showing the divergence in the case usually moves the farthest. Usually it don't have to, but it usually does. It moved the farthest. They go to NQ taking off, right? Now that the NQ have taken off and we're going back up on the ES, I was saying all that to say we've come right back to this bearish fair value gap. We've come right back to a bearish fair value gap right there. So like I say, you can't, when you're in the market and it's showing all of this divergence like this right here, right? It's showing this divergence like this. You can't marry the direction, right? Tim, what are you saying? I'm glad you asked that question. Right? Let's zoom into closer where we at now. Right here. All right. I just kind of train my eye to like see this stuff over time. Right? Look at a shorter time frame. It's diverging. The Dow is showing weakness right here. Right? The Dow is showing weakness right there on this last 15 minutes. Right? And as it's showing weakness, as we're diverging, what did we just hit? We just hit a destination, a bearish fair value gap. That right there, coming into that, seeing that divergence, coming into that fair value gap right there, that can heighten your idea to short right there. Why? We came up and we took out buy side where we went short at the top of the fair value gap, right? We came up, we took out buy side, we came down, we took out sell side, right? Left an imbalance on the way down. We took our sell side here too. took out sell side, left an imbalance in the wake, right? Hit a destination to reverse, coming back into that destination, showing divergence right there. Boom, short off of that fair value gap right there. That's the way I use my, you know what I'm saying, looking for my divergence and using it going into a destination. I said all of that with everybody, but I said that more so because, you know, I didn't do a live market watch twice with the Black Spotters. So both days I've been trying to share my thoughts on reading the price action. Right there. And one other thing before I get out of here, right? When we come up and we take out a high, right? When we come down and set a low, come up and take out a high, right? Going short up here off of this fair value gap, right? I went short off the fair value gap to take it back to this low. But if you come up, if this is how ICT this is how ICT gets the double entry, if you will, the early entry, if you will, for his breaker setup, right? Because we came up, took out the buy side, came up, took out the buy side, came down, set the low, right? So this low came up and broke that high, right? He'll go short, like right here on this candle right here, right? He'll go short on this candle right here because this low came up and broke that high, right? Right, so you got your breaker over there. Right, you got your breaker over there. Now, mind you, I took the trade off of a daily fair value gap that had confluence with an hourly consequent encroachment based off of all of the TNA that I talked about earlier. But looking at this right here, I'm talking to myself too right now, but looking at the price, this is how ICT be trading his breaker when he get, like, when he scale in. Like, we came up, we took out the buy side here, right? So just like on this move here, we came up and we took out the buy side. We came down and we set a low, right? Set a low, taking out the sell side, which is barely poked through, right? Took out the buy side, came down here, set a low, took out the sell side. Then we took off and took out that buy side again, right? Right there, you got a low that's taking out a previous high. He's anticipating this to be his breaker block right there. Why? Because he's anticipating price to reverse, right? Why? Because it's reached the premium PD array, right? It's reached the premium PD array. He's anticipating it to reverse, right? It's giving him clues that it's going to reverse. He would go short over here on this, right? And this would be when you see him put on 10 contracts here and then put on 5 contracts there. That's how he scales in, right? This is where I go in on this fair value gap. This is where somebody who trade breakers goes in on this breaker right here, right? I go in, I trade fair value gaps. I would go in here. I would take the short there, right? Why? Because we've took out buy side at a premium PD array, came down, took out the sell side right here, right? Traded back up to that fair value gap, and I would go short there, like I was just talking about. But, and I said a lot of other stuff too, but as it's dropping short down here, right? This is why you can't marry a direction when you're diverging like this right here, because once we got down here to this fair value gap, that was, what is that? Let's see if that was equilibrium. Right, almost at equilibrium. almost at equilibrium, right? For this entire move right here. And then we bounced, right? And then we bounced. Like I would have, like if I was waiting to trade off of this entire move, I would be waiting down here at this fair value gap right here. You know what I'm saying? I'll be waiting there at that fair. Why? Because it's in the discount, right? Because it's in the discount. But we never even made it there, right? We never even made it there. We came here to this. It's a discount PD array from what price is, but it's not a discount PD array for this price leg right here. Right? So sometimes you got to exercise patience and wait. You know, sometimes you got to, well, all the time you got to really dig into the price action and see. And we already know what I talked about with these PD arrays down here, why I wasn't expecting it to come down there until it did something else. We talked about all that earlier. But again, hopefully me sharing my thoughts on how I see the price action, how I read the price action, how I implement it in my own real trading. Hopefully that helps somebody. And for anybody who may be feeling like, oh, this is hindsight. I know, you know what I'm saying, the tried and true that's still on here, I know y'all already know, but if anybody pull back up on the replay, you know what I'm saying, I just like to draw your attention to the fact that yesterday, and I'm not trying to toot my own horn. This is to encourage people who don't believe in the concepts or anything like that, right? Opening a browser right here. This right here, you see this picture right there? This is that daily fair value gap I was talking about selling off of. You see that 4,006 at the top right there, right over there. It says 4,006 right there. That's the daily fair value gap I was talking about selling the top of, right? Or I had the idea of selling the top of right there because it was a premium PD array, right? We've come all the way up here. We've come up to a premium PD array, right? That's a picture that I took. Cancel. I didn't want to do that. And then as you see, I shared that yesterday at 1:19 p.m. right there. 1:19 p.m. yesterday. That's when I shared that. Will someone remind me to discuss this tonight on the live stream? That's when I shared that. So I know the tried and true that's on here already understand that we don't do hindsight around here. And it's not to toot our own horn. It's to encourage each other that this is possible. What many have taught us throughout the years, I tell y'all all the time, even my own financial advisor wholeheartedly believes that you cannot time the market, right? Wholeheartedly believes that. Why? Because it's been ingrained into anybody who gets in the market that you cannot time the market. And it's okay. I don't try to force my beliefs on anybody. I told you I treat it like the gospel. I share it for free. And if you accept it, you accept it. If you don't, I wipe the dust off my feet and I move on out. That's not to knock my financial advisor. He's great at his job. He's taking great care of my money and a lot of other people's money. They got over a 200, and when I went to visit them, they had just 200 million. Now I think it's close to 300 million that they got assets under management. They do a great job, but they're in the mind frame of you can't time the market because they don't know this stuff. They're not traders. They're long-term investors. They don't believe in this stuff that we do. Now, my advisor, he is a trader, but he sells premium. He's a premium seller. So he don't trade the same way I trade. He's a premium seller. He wants the market to just go sideways. When the market goes sideways, that's when he make the most of the money. Or if it do something radical You know what I'm saying? He sell premium for stuff that's moving radically. He got this whole weird way of doing it where he make his money based off the is it the it's not it's the theta, nah, it's not the theta, it's the I can't remember. I got to go back and look at it, but he got this weird way of doing it, but it's highly successful. Highly successful. You're welcome, you're welcome, you're welcome. Thanks for going over that breaker repetition. Oh, you trying to get the VIX. Hey, Towns, I don't even know. You know I don't be looking at the VIX. I don't care nothing about the VIX, man. Let's go look at the VIX for Divario. Man, I cares nothing about the VIX. I cares nothing about the VIX. Let me tell you why I don't care nothing about the VIX, right? And this ain't no knock on nobody who look at the VIX or study the VIX or trade the VIX. Now, back in 2020, no, 2021. Back in 2021, I used to like play the VIX from time to time. And I used to play the VIX around OPEX. I would play the VIX around like FOMC. I would play the VIX around certain things, but now I could care less about the VIX. And the reason why I could care less about the VIX is the VIX is just a volatility index, right? When it comes to the VIX, you're playing volatility, right? You're playing volatility. And the VIX, in my personal opinion, is more of a gamble type trade because you're placing your bet that the market is going to be volatile and you know what I'm saying, in one way or another. You're gambling that the market is either going to spike sharply or drop sharply. You know what I'm saying? That's what you're pretty much betting on when you're looking at the VIX, right? A lot of people, especially like me, when I first got into trading, right, I was very misled when it came to the VIX, right? Because I would hear a lot of people say the VIX in the market are inversely correlated. When the market goes up, the VIX goes up. When the market go down, the VIX goes down, right? And that's not the truth. The truth is the VIX tracks the volatility of the market. So if the market is extremely volatile, then the VIX will move in the opposite direction, right? So if the market is extremely volatile to the bottom, like it's spiking to the bottom, it's like extremely volatile, right? Then the VIX will spike up. If the market isn't volatile, then you're not going to get those like great moves in the VIX. Just like you may hear some people saying, "Oh, the VIX is below 20. The market fund a tank." That's not necessarily true, right? That's not necessarily true. Just because the VIX get below a certain point, don't mean the market going to tank. The VIX is just volatility. It's just, you know what I'm saying? That's just no, that's what who uses the VIX. That's what he uses. Who is he? I think the 0 DT throw the VIX off. I don't care nothing about the VIX. I don't care nothing about the VIX. I ain't your average bear. Like back up to I ain't gonna hold you. Back in the day, man, I used to put so much value on all this stuff that hey Towns, who is he? No, that's what he uses. Who is he? What are you talking about? I used to put so much value on this stuff. Like, remember when I was talking yesterday when I was like, I used to put so much weight on quad, which I used to put so much weight on. I guess I could put it on the ES and let y'all watch the ticks move. Watch the ticks move. See how that played out right there? Going back up into that breaker and that fair value gap right there. Beautiful. 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 That is beautiful. I would say, do the black spotters want me to do a journal entry for this right here? But I'm not. Go. Oh no, he don't sell premium on the VIX. Nah, he don't. He don't sell premium on the VIX. He sell premium on anything, any stock that's out there. Like, he got this weird way of doing. Like, he just say he'll look at some sectors that's high flying, then he'll look in that sector, and if it's got like some high flying stocks in there, and he'd be like, okay, that's gone a little bit too far too fast, and then he might sell some premium on it, and then another stock he might sell some premium on this stock over here, and it's like he used his like portfolio, the way he run his trading portfolio. He what's up, Towns? The way he's trading portfolio is the whole thing based off of it's not the it might be it's the theta. It's like he had long as he got like I got to go back and look at some of the old videos he did. What's up, Towns?
Hey, what's up, my guy? No, I was saying, I was assuming that you were saying that the previous individuals referencing sold premium and it was based off what the VIX was doing. Because, if the VIX is elevated, you get a higher premium. If it's lower, then you kind of decide, okay, I don't need to sell. That's what I was thinking you was trying to say.
Oh yeah, no, he don't even. Well, he might look at the VIX, but when I was just talking about how he did it when he's selling his premium, like he does like he used his whole portfolio, right, and he calculates his positions based off the it's one of the Greeks, it's not, I don't think it's
Delta.
No, it's not the delta, because he be trying to stay delta neutral a lot of times. It's not the delta, it's like it's something else how he calculate. It might be theta. Long as he got like so many points of theta, he good, because he know like he making this amount per day, and he be based off his whole, because it just be like random stocks. It'd be like random stocks he be selling premium on, but it be in the criteria that he needed to be in. And he said, okay, if I sell this position, now I need to put something on to make that theta back up, or whatever the Greek is that he using, because he got like this whole curve where he know if he get too much, it's not going to be profitable. If he get not enough, it's not going to be profitable. But if he keep it like right at a certain area, the portfolio can continue to be profitable over time. It's like he managed it like totally different. he sell premium, and it's like it's so complicated in my mind, but it works for him because he was doing like these trade, and he's the trade at lunchtime, and he just get on there. He'd be like, okay, tomorrow we probably gonna move some positions around, and it's like so stress free how he do it, but I don't understand it, and it but it'd be crazy. I'm gonna go back and look at the video so I can explain exactly what he be doing. Because it's like in the private membership section where he got it at, where he was doing it. Because he can't do like real trades out on the internet because he's a licensed financial advisor, so he can't do it on the internet for publicly. He can only do it like in the private with clients.
Okay, I got you. Cool. Yep. Hey, I know you talked about it. Well, real quick, this is what the NQ doing versus what the SPY doing is a divergence, right? Because I mean, I'm looking like the SPY done dumped almost 1.3, almost 1.5, and the QQQ barely moving.
Let me go to. Hold on, let me pull up. Got it on the hourly. Look at the hourly charts. Okay, so this is hourly chart here, and as you see, the SPY would be like far weaker than I'm looking at the futures right now, but the SPY
me too.
It'll be far weaker than the let me see if I could let me pull up the actual what's the name. Let me see. Because the Qs and the SPY, all of that gonna move in tandem with the futures, but let's go over there.
I got in so quick. That was such a good trade.
I guess it'll be this one. Investo QQQ. Yes. Make sure the data is data live data. Yes. Okay. Yeah, that look like it's live. Why is this showing 15 minutes? Oh, why is it showing 15-minute candles? I had it on hour. 1 hour. Oh yeah, okay. Because it opened at 10:30, 9:30. I'm tripping. Okay, yeah. Open at 9:30. I'm tripping. All right, so all right. Looking at the like the SPY is far weaker, right? The SPY is far weaker, and this is coming from the 6th of March. I went back kind of far there, right? And let's go here, right? Back here to the 9th of March, right? As you can see, the Q's been stronger, like no matter how far, like go back to this same point there, the Q's have been stronger, right? So we've been like we're showing divergence, right? We're showing divergence now because we were coming down together, right? Both made lower lows, and then once we came down, right, the Q's, after we took out this low right here, right, the Q's started showing strength, right? The Q's didn't go as low, right? The Q started showing strength. It started diverging there, right? So once it started diverging, right, once we got the reversal signal up in this area right here, right, the Q's took off, right? Because like I say, most time the one that's showing the strength will move the farthest, the fastest, but it doesn't always. But most of the time it does, right? So now the Qs are showing the strength, right? The Qs are showing the strength, so the Qs are running the highest. So now the Qs are coming back, trying to attack highs way back here in February. We're like right at the highs in February, so it's been running higher, right? And the Qs are still showing strength now because look how far the SPY has come down just over today, from yesterday to now. From yesterday to now, the SPY has dropped down a whole lot farther than the Qs have, because the Qs have been showing the strength. You know what I'm saying? The Qs have been showing the strength. So the Qs are still showing the strength, and they're about to. Did they take it out? Did they take it out? Did they take it out? How? Let me see. What's the how? Let me see. I can't see the numbers. But yes, it's divergence, and the Qs are showing the strength. The Qs are the stronger out of the three. The Q, what the way line? The Qs are, no, it hasn't taken it out yet. The Qs are the stronger of the three, right? The Qs are the stronger of the three. And what are you looking for? You want the Qs to pull back? Are you still there?
Yeah, I'm still here, man.
Okay. You want what are you looking for the Qs to pull back?
Yeah, I mean that's what I was looking for. Because
so if I was looking for the Qs to pull back, right? Since the Qs is the strength leader, I wouldn't try to look for a reason to short it until after it takes out these highs that it's right there at, like this high right here at
what
that
level is that one? I got you on my phone.
What is that? Open high 309.27, right? We right there, right? It peaked at 309.16 right now, but at 309.27, right? Let me go to my daily real quick.
But you wouldn't count that because I remember like a lot of times you said that's close enough for government work, right? So I mean, like we less than 10 cents away from it, right?
Close enough for government work. Close enough for government work. It's for like other things besides, like when it comes to running out the buy side and I'm looking for a reversal, I need to run the buy side, right? Close enough for government work is like if I'm already in a position, or if we like feeling an imbalance or something like that. You know what I'm saying? Okay, that's close enough for government work. But when it comes to running sell stops or running buy stops and looking for a reversal, I needed to do it. I need to do it. If it don't do it and it go without me, see you buy. But I needed to take out that buy. So that's a daily high. That's a daily high right there that I was looking at. So once it take that out, then I will possibly be looking for a short. But now this is the thing that you got to be careful with this, right? This daily high is really, really close to that daily high of the 15th at 309.27 is not that far from the daily high on the second at 313.68. They're not that far away. You see what I'm saying? They're not that far away. In that 313.68 high, that puts us back into a bearish fair value gap over here, right? A bearish fair value gap over there, right there at this mitigation block right here. So you got a mitigation block from back here on August 22nd, right? Because you came down. You can literally count them two daily candles right there, but we'll just go with this one here. And if you look at that's where it gets sticky with the what's that? Because I'm using this price leg right here to make this a mitigation block. I'm using the high from August 16th down to the low of August 24th as the price leg that I'm looking at. Then we came back up because we came down, took out the sell side, then pushed back up, but we didn't break that high. That's why I'm calling that a mitigation block right there. Right. Okay. If you want to get into it with people who look at like shorter time frames, like then you can argue that, hey, that's a breaker because we came up and took out that daily high. Right. But since I'm looking at this entire leg, that's why I'm calling it a mitigation block. But tomato, mitigation blocks and breakers, they do the same thing. One just broke a swing high and the other one didn't. But back to what I was saying. When we get up here, it's just like a little sticky little place where you want to pay attention to all of that. Like, so I wouldn't be looking to short that until I got a nice reaction after we ran out this buy side, and then I got a nice reaction off of it, and it gave me a reversal because we got some premium stuff up here that it can very well attack. You know what I'm saying?
Okay. So, and I know we don't do crystal balls, but I'm looking at the NQ right now. Now, if I go back, and I look at all three of them because I kind of trade every indice, just kind of depending on.
You were just talking about the Q, and then now you on NQ, man. Let me.
No, I got a question. No, this is a question.
Yeah,
right?
go ahead.
So, the Dow has almost taken out its fair value gap on the 15 that it set yesterday. The ES still has a little bit more. It still got from what I'm looking at. I'm just going from yesterday. Yeah, on the 15 minute. So like if I go to YM, it's pretty much taking his out. Well, one of two of them out. The ES, I think, has one more left that I was looking at. Actually has two more left. And it starts from the 10 o'clock candle yesterday. It said low was 3941.25. And then if I go to the 9:30 candle, its high was 3926.25. So I was counting that as a fair value gap. And then I was looking down at the 9:15. So my question is, can you have two fair value gaps if that one candle is making a fair value gap from another candle? So it's kind of like from the 9:15 on trading views from the 9:15 candle to the 10 o'clock candle. I see two 15-minute fair value gaps, but I want to make sure I'm looking at that right because I didn't know if you could overlap them like that or not.
Or 10:15. 10.
Oh, I'm sorry. I'm on Central Time. So for you,
okay. All right. So 10, yeah. Okay. So okay. Yeah. All right. So yeah, because I'm looking at it right now, and I got 10 something. Yes, two fair value guys right there.
Okay, so they can overlap each other. Okay, I just want to make sure.
You got two fair value gaps there on the. You say on the YM, right?
Yes, and on the ES, YM and ES.
Yeah, the YM and ES, right? You got a 15-minute fair value gap here. Now, so that'll be like you said, your 9:30 candle created a BISI right there, and then your 9:45 candle created a BISI right there. It's two of them back to back.
Okay.
Right. So, and when I say created, like the candle, like the time that I'm giving you, that's the one that made the gap. So the gap will be that you'll draw the box in between the high of the candle to the left and the low of the candle to the right. Right. Okay. So if I say your 9:30 candle made the BISI, you will draw the high from your 9:15 candle and then up to the low of your 9:45 candle. Right.
Okay.
And then your 9:45 candle created a BISI. So you'll draw the high from the high, you'll draw the low from the high of your 9:30 candle to the low of your 11 o'clock candle.
Okay.
I mean 10 o'clock candle. I said 11. Yeah, 10 o'clock candle.
Nah, I follow you.
And you're inside that busy right now. We just traded back down into it. We've gone like more than 75% the way through. We're inside that busy right now. And the market is still looking like really, really heavy. So we probably will continue down and get that other one. Even if we push back up, because if you look above it, all three indexes have made a breaking market structure to the downside on the 15-minute, and we have we got a SIBI above price at the breaking market structure on all three. The SIBI on the we got the Dow is showing strength because we're working on a second SIBI for the NQ and the ES, but the Dow has already retraced and overlapped, so it only has one SIBI right there at the breaking market structure on the Dow, which is right there in between, and that's the that'll be your 9:15 candle for today, and that created a SIBI on the Dow, the ES, and the NQ. Now the ES and the NQ, they're working on another SIBI, a bearish fair value gap on this. That'll be your 9:30 candle, but the Dow has already overlapped, so there's no chance of it being a SIBI right there. So the Dow is, you know what I'm saying, showing relative strength still, like how the Qs was showing relative strength to the SPY. Right. The Dow is starting to show strength to the Qs and the SPY right now. Just on his last, on his last 30, 45 minutes or so. But just looking at this right here, just looking at how the price moving right here, we're all, let me look at the dollar real quick. Let me add the dollar to this. We pay. Okay, so all right. We got divergence on the dollar. The dollar was trading down with the dollar came up and started consolidating here. We were consolidating in the dollar, and then when the indexes started dropping, the dollar dropped with it. That's divergence, right? So when the indexes drop, the dollar should be going up, right? The dollar should be going up when the indexes drop, but the index dropped down, coming into a fair value. This one hit the fair value gap. The ES kissed the fair value gap, and the NQ didn't make it down. It stopped at this down close candle. It didn't get down that far, and then the dollar showing weakness, right? The dollar showing weakness. If the dollar continues to drop, then that would lend of a possible pop of the indexes, right? But again, the indexes are showing weakness, and the indexes are, let's see how far we done went up. Let's see how far we've come down. This is when you got to like, we in that chop time frame, and we can't marry nothing. We can't marry no idea. We can't marry no direction of nothing. Where's mine? Oh, it's already on there. Why is that? What's going on with my chart? Oh, my snap ain't on. And we just got back down into the discount.
Okay.
So we just got back down into the discount. We're in a discount. We're coming to a discount PD array on the ES. The dollar starting to show weakness, right? The dollar starting to show weakness. So I wouldn't be trying to chase a short right now because we've come back into the discount. Like the short was from, remember when I was talking about earlier when I took the short in the sim trade up here, and then I was talking about coming back to the short off this fair value gap and this breaker over there. That was the short there, right? Now that we've come down, we've gotten back into the discount. So you don't want to be trying to, I don't want to be trying to short in the discount.
Gotcha.
You know, I don't want to be trying to short in the discount, and it's not this is just giving me retrace back. Because remember when I was talking about this, all this right here was a balanced price range over here, right? All this was a balanced price range. So now to me, it's just coming back to take care of these imbalances that it left behind, leaving this balanced price range, right? The only time a short would start looking interesting to me is if we went down and took out this low down here at 38.95. If we took out this low down there, then I would be interested in a short coming to attack the lows below 38.65 if we came down and took out that 38.95. But coming to here, we just coming back. Now we're in the spot where I'll be looking for a bounce to go long, especially with the dollar showing weakness right now.
Okay, I got you.
And then even if it only now, and if I played a bounce to go long from down here, I would only be trying to play it back up to this imbalance right here at the breaking market structure. I would only be trying to play it back up to what just happened. Come on. This imbalance right here at this breaking market structure right there between 39.62 and 39.72, right? Just say if it came not, just say if I want to go long off of it, I'm looking at this and I'm waiting for it to come back to this discount PDub right here, right? We got this fair value gap right there in between 39.26.25 and 39.41. Just say if I want to go long at consequent encroachment of that, we're just gonna call it 39.34, right? I would only be playing it back to this fair value gap right here at 39.62, right? Why? Because we've come down and we've broke market structure to the downside, and we left a fair value gap right there, right? So we left a fair value gap there, and we got that fair value gap is lining up right here with this order block right there, right? We got these candles here that came up, and then we took off to the downside with this fair value gap. So this right here is a potential order block right there, right there. And then if you look at it closer, this right here is a breaker. So you got a breaker, you got a bearish breaker right there, right? Bearish order block right there, fair value gap right there, all in the same area. So I would only be looking to go back to there. Because it's one of the things where we can't marry no direction because we still dealing with divergence in the indexes. So the likelihood of the market running in that direction for a long time is lessened when the indexes are showing divergence with each other.
Okay. Appreciate that.
Man, we're in a time where it's like that's why I ain't swing trading nothing, man.
See, I just been doing day trades for the most part on the features. Pretty decent, but they kind of just stood out to me. I was like, man, the QQQ not doing nothing. Everybody else tanking.
Because that's the strength. Like when we that's what I be talking about. Like if you want to short something, it's like 9 times out of 10 you don't want to short the strength leader 9 times out of 10. Now it's gonna be that one time where you get a nice short on the strength leader, but if you're trying to short something, if you play the SPY and the Qs, if the Qs is leading in strength and then we get the divergence, you want to short the SPY because the SPY is going to be the one that falls faster, you know what I'm saying, 9 times out of 10 if the Qs are leading in strength. But like I said, it's gonna be that one time where it, you know what I'm saying, that the other one will go, but you got the probability of the weaker one falling faster because it's the whole relative strength thing. Just like when you look into short a stock and you look inside, like if Microsoft, let's say if Apple is weaker than the Qs, right? Then you would expect Apple to fall faster than the Qs fall when it start dropping because it's weaker than the Qs. It's the same thing where if the Qs are stronger than the SPY, you would expect the SPY to fall faster than the Qs because the Qs was the one that was stronger.
Okay.
And that, you know, and like today is just playing out to the norm. It's playing out to the norm where if you look at where we've come from, what we've done, like I got the ES and the NQ up, right? So looking at the ES and the NQ, if we come back here, where's the NQ? And put a line like where we are now, right there, and then the ES, put a line where we are now. Move all this other junk out the way so I can see my lines. Move the fair value gap. I don't need none of that. Okay, so looking at where we are, right? The ES has come all the way back down to this consolidation from yesterday, right? But the consolidation from the NQ, we a long way away from it. So NQ is the relative strength leader. It's been the relative strength leader because if you come over here and look at the highs that we went above, the NQ is far above those the same highs on the ES. So the NQ is the strength leader. So now that the market has started to pull back, right, the ES is falling farther and faster. The SPY is, you know what I'm saying, the ES, the SPY, but they're falling farther and faster than the NQ because the NQ was the strength leader. And so when we got the divergence and you look into short, you don't want to short the strength leader 9 times out of 10. You want to short the weakness leader.
Okay. Makes sense. Cool. Well, I appreciate it, man. And I will see you later on tonight.
All right. Who is that whispering?
My son.
Oh, okay. All right,
man. Take it easy, man.
Yeah. Hey, ES4 look to be hitting an old ES4 hour. ES4 hour looks to be hitting an old high. What time is it? Oh man, I got to get ready to go to the gym. It's 11 o'clock. I got to get ready to go to the gym. Hey man, I appreciate y'all for hanging out with me. Again, hopefully I was able to share something. What did you just say? I don't know what just happened. I don't know what just happened just now. I must have hit like the space bar or something. I don't need none of this. I can take all this off. There you go. All right. Thank you. Y'all far too kind. Thank you for hanging out with me. We've been on here for like almost 2 hours. I have not been hydrating, and I got to go to the gym. I'll see y'all tonight. Woo! I'll see y'all tonight at 6:30 for the price action recap. I think that's it. It is. If it ain't, it's gonna be gone.